SBF coming home, extradited to the U.S. Prison wasn't so great for him, so he wanted to, work his way home. Brian Armstrong makes regulation proposals that we wish that we had, and also Visa steps into the Ethereum frontier. What does that mean?
Bankless Nation, it is the Friday before the holidays. David, what time is it?
Oh, it's the Bankless Friday weekly roll-up, Brian, where we cover the entire weekly news in crypto, which is always an ambitious endeavor, and we are almost at the finish line of 2022. Thank the Lord. Yes. And so if you have not yet grabbed a morning coffee to enjoy the weekly news in crypto with us, please do.
Put some Baileys in this one because let's get festive today.
Why not?
All the calls I've been having with people have been like they've been at their parents' house or something, like visiting family this week, and you are there too, right? So you're on the West Coast today.
I am freezing my absolute tail off in the bottom of my sister's house with a sleeping baby in the next room. So this is a different kind of weekly roll-up.
Guys, I want you to know this level of dedication, all right? This is what David Hoffman does. On his holiday, while he's with family, sleeping babies, it's the crack of dawn as we're recording this on the West Coast. There's no sun out, and we're still getting a weekly roll-up to you.
Of course.
Right before I take off myself. All right, David, so what are we going to talk about this week? What are the topics?
Of course, there are some SBF updates. He is no longer, Ryan, in the Bahamas. He is in New York hanging out with the FBI. So that's
just visiting family too?
just visiting temporarily, or perhaps more permanent. So we'll talk about all of the SBF drama. Caroline Ellison apparently cooperating with the Fed. So we'll talk about that too. Brian Armstrong proposes crypto legislation that we wish we had. So we'll unpack all of that. And also, Visa is taking a big step into the frontier of Ethereum protocol development. We'll talk about all of that and more.
One of the things as well that's going on this week is Binance is talking about bailing out Voyager, doing the thing that SBF promised to do, but was never able to manage. So that's an emerging story as well. David, we got our friends and sponsors, Kraken, to tell you guys about today. Kraken is a crypto platform that did not rug us in 2022. There are a few crypto platforms that I recommend coming out of that crazy year that we just had to people. And Kraken is one of those. Can you tell them why?
Yeah, Kraken is one of these few exchanges that are living and breathing the ethos of crypto to the best of their ability while also being a centralized exchange. And that is why we are choosing to work with Kraken in 2023 as our strategic sponsor because, Ryan, they use cryptography to empower individuals. These are words that I love. And so with their proof of reserve system, they allow their users to verify their own liabilities inside of Kraken. And just when we interviewed Jesse Powell, he just exuded the crypto ethos that I know that you and I are all about. And we still need centralized exchanges to go bankless. That is many, many people's first step. And so we are working with Kraken in 2023 more closely to emphasize the best of what their product has to offer for the bankless world.
Yeah, I think, look, when it comes to a centralized crypto platform, if you're a customer of that platform, you should have the ability to verify whether the crypto platform has your deposits and whether they're backed by real assets, full stop. And Kraken has a proof of reserves system that they have rolled out to do that. They've been doing proof of reserves for a long time. You can find out more about that in the link in the show notes. That's kraken.com. David, let's get to the markets, man. What's Bitcoin doing to us today?
It's going down. It started at 17,000
rather than for us.
Exactly. Yeah.
Okay.
We are feeling the Bitcoin. Yeah, it is at 17,700 at the start of the week, ending the week at 16,700, down about 6% on the week.
Down 6%. Okay, so
yeah,
this
is a little bit of the timing of the measurement. We just happened to start last week at a little bit of a high, and now we're kind of back to like 2 weeks is flat.
I mean, but like 1,600, that doesn't feel great, does it?
No, it does not.
I mean, we are below the 2017 all-time high, aren't we, for Bitcoin?
Yes, by a lot, yeah. Mm-hmm.
How about ETH? That's also below the 2018 all-time high. Yeah, what's ETH doing on the week?
Down 6% on the week as well. 1,270 down to 1,200. A little bit more than Bitcoin. Bitcoin was a little bit less than 6. ETH is a little bit more than 6% down on the week.
Guys, I don't think we're going to get our bullish recovery, our V-shaped recovery in 2022. No. I feel like that's a safe one to call, huh, David?
Yeah, people were
going to end down.
People were kind of bullish for a green December, but December so far seems to be pretty weak.
And we're down on the year. Like if we look at the
we're down on the year.
Bitcoin and ETH.
What do you mean we're down on the year?
Well, no, actually. So no, what ETH was like at the start of this year. So December 23rd of last year, I remember it being in like the 800s, something like this. So I think we're up from that at least.
Wow.
We're look at the charts.
Wait.
I know it seemed like a long time ago.
No. You're skipping. You're 2 years. You're thinking in 2 years right now.
Am I really?
Yes, you are. Yeah, because ETH was $4,000 in December
That's
of last year.
embarrassing. Guys, the years are not blending together.
Yeah.
Oh, okay.
Yeah.
Cancel that. That was wrong.
Zoom out to 2 years and you can.
I was thinking about 2020 of December,
exactly.
wasn't I?
Yeah, you got confused because we were recently talking about this when we were doing our ETH bull case or ETH with the bulls that we recently did, which I believe comes out Monday. Yeah,
it does, guys.
You were thinking in 2 year time frames. Sorry, brother.
All right, so we're up on the 2 year though, David. That's the silver lining. But look at the 1 year. Wow, we were
one year is literally down only.
We were 4K last year at this time on ETH. Definitely down. Definitely
in complete denial of the bear market. Yeah.
Yeah, I basically was subconsciously for a minute there. How about the ETH Bitcoin ratio? What's that looking like?
ETH Bitcoin ratio down 1.5%. We are down to 0.0718.
We shaved off a nice $2 trillion this year in terms of crypto market cap, I believe. And we are under $1 trillion. What's this number this week, David?
Yeah, we are at roughly 900 billion in total market cap last week. 837 billion is the total market cap this week. Oof.
Yikes. A few trillion down. But I want to say to everyone listening to Bankless, and we know you guys have been with us through this mighty fall from 4,000 all the way down to 1,200. Congratulations to you, because you have survived 2022.
Yeah.
It's almost over. This is a market that, as I just mentioned, is 2 trillion down from the top in crypto. That's a lot of zeros down. We've also suffered the worst inflation, David, in over 40 years. And we had the death of one of the 3 largest crypto exchanges this year. FTX just evaporated. SBF is literally in jail right now. And not just an exchange, an algo stablecoin. All of the biggest lending platforms, Celsius, BlockFi, Voyager, the biggest hedge funds in crypto all evaporated last year. And yet you are still here. You are still listening. You survived. And I think that is worthy of some holiday celebration. Congratulations for surviving 2022. You've definitely earned it.
Yeah, it's worth noting that it was not easy to do that. It was not easy to get through 2022. And this is one of if you zoom out as to what crypto is going to do for society and for all markets, all financial markets, holding on to your crypto assets from now into 20 years from now is not easy. People get whipped off by volatility. They get enticed by leverage. They play in the shitcoin casino. If you are still around, congrats. That was not a hard thing to do. That took mental resolve.
That's the thing. When you say, David, it's not easy, you're absolutely right. It is not easy. And yet, David, it is so simple.
It's simple. It's not easy.
It's just a whole bunch of things you don't do.
Yeah.
Yeah. Just hold. How about that?
Yeah.
Just hold rather than going margin, rather than playing in kind of the shitcoin casino, rather than aping into the latest NFT, right? You just hold for the long term and you would have been fine through this, as long as you can bear these kind of 70 to 80% downs from all-time high. But there is a silver lining here, and that is DeFi is rising. Look at this. This is the decentralized exchange user growth across all chains, and this starts in January of 2020, over 2 years. Look at this, the number of DEX traders over time on Ethereum. We're above 5 million now. We're closing in on 7 million. And that was basically nothing 2 years ago on Ethereum. And we're also seeing this on Polygon, okay? We have almost the same amount of total decentralized exchange traders on Polygon now. Binance Smart Chain, Solana as well, up. Optimism, massively up. And of course, this is a layer 2. So we're seeing some massive...
Optimism currently is accelerating more than any of those previous charts.
It really is. And let's talk about that a little bit more, David. This is a stat from Layer 2 Beat, which tracks the progress of Layer 2s. What are we looking at?
Yeah, it's specifically this framing that they use, scaling factor. So in this graphic that we're looking at, in the last 60 days, the scaling factor of Layer 2s was 2.4x, as in 2.4 times the amount of Ethereum Layer 1 transactions happened on Layer 2. And I really like this new metric, scaling factor. I think that's going to be a metric that sticks around.
Okay, and so basically 2.4x, it says over the past 60 days, there was 2.4 more transactions in the Ethereum ecosystem thanks to Layer 2s. So that is basically doubling the scalability of Ethereum.
Right. Yeah, so 63 million transactions happened on the ETH Layer 1, and 88 million transactions happened on Layer 2s. Cool.
Yeah, very cool. Here's another stat for you too, David, on Layer 2s. Layer 2s have actually flipped the Ethereum base layer in terms of aggregate transactions per second. And you can see that in the chart. Layer 2s are in the green here. And ever since October, they've been above Ethereum in terms of transaction activity. Pretty impressive.
Yeah, I expect this to only continue into 2023. The lappening also can apply here as well. Like, can we when can we get to 10x Ethereum Layer 1's transactional activity? Probably sometime in 2023, I bet.
I definitely think that's coming. And let's talk about some of the old DeFi coins as well. MakerDAO recently experienced an increase in revenues, and that's interesting. Imagine a DeFi protocol generating revenue. MakerDAO has done this fairly consistently, especially in thanks to real-world assets. WRA is the acronym for that. The real-world asset category is expanding pretty quickly in Maker. What are we looking at here, David?
Yeah, so this is a chart that shows the distribution of types of assets inside of MakerDAO, and that blue section in the top right corner is the real world asset section, which is now over 50% of all types of assets inside of MakerDAO. And you can, if you click that chart right there, you can see how much money that they are making. Speaking of charts that are going up and to the right, this chart was basically nothing in January and April of this year, and is now over $600 million of revenue from real world assets going into the MakerDAO treasury. And like, this is a landscape that no other DeFi app is going after. And like, some people don't like it because it's centralization risk, it's real world risk. That's a fair take, fine. But also just like, think about being able to charge interest rates on the world. Like, no other DeFi app has that in their sights other than MakerDAO, and they're actually executing on this. $600 million in revenue a year going into MakerDAO by charging real companies real money. I think that's bullish.
And these real world assets are things like treasury bonds, 0 to 1 year maturity, 1 to 3 year maturity. So these are traditional legacy assets that are being put into these DeFi protocols. It's really cool to see.
There's also real estate in there as well, but much less than that.
Real estate, tokenized real estate, David. Who would have thought? Let's talk about what you're doing during the bear market. I was thinking about this as we were preparing the roll up for today. What to do during a bear market? I came up with 4 answers to this. And I want to get your take on this, David. Number 1, I think, what do you do during the bear market? Invest in yourself and acquire skills. This could not be more important. This is a fantastic way and time to build marketable talent, skills that you can sell to crypto companies. That's number 1. Number 2, start a side hustle in crypto. So if you're not fully employed in crypto, then it's your full-time hustle. But if you're not, this is a great time to begin experimenting. I mean, join various DAOs, for instance, start a side hustle. Bankless started as a side hustle for both of us, didn't it, David? So even if you have some sort of opportunity or role in crypto, you could still engage in side hustle. It's a very side hustle friendly environment. Number 3, dollar cost average into the gems. Not financial advice, of course. My take is 70% ETH. That's what I'm doing. And then 30% other. Dollar cost averaging in during the bear market is another thing to do. And number 4, build your network and meet as many people as you can. It's a fantastic time to meet more settlers like yourself, more builders. This is the best time. Like, all of the people who are here for kind of the short-term gains, they're gone. They're out of the space. Mostly. And so there's a lot of signal in the space now and a lot of quality people. And this is a time to begin building relationships, build out your network, get on Zoom calls with people, get in people's DMs, provide some value to them, write articles, publish posts, contribute in some way to the ecosystem and build those relationships. So these are my ideas for a bear market. What's your take on this, David? And I'm curious what gems you're buying. Are you dollar cost averaging in yet? And what are you looking at?
Oh, I'm always dollar cost averaging in. Like that button never turns off for sure. I'm looking at these 1 through 4, and I'm just like being taken back to the 2018 to 2020 bear market, because this is exactly what I did.
What you did?
But, yeah. So
I was kind of thinking about you during this.
Yeah, exactly. Got out of physical therapy and into consulting inside of the crypto space. So that was my number one. Starting a side hustle was my first podcast before starting the Bankless podcast, which like was also developing skills for the Bankless podcast. Of course, was buying dollar cost averaging. I was definitely doing. You could also call it dumping a paycheck every single 2 weeks. Same. But then number 4, number 4 is where 1 through 3 get expressed. So make yourself better, acquire skills, start a side hustle that you can talk to people about, get skin in the game, but then go out and meet people, because like Ryan said, when you meet people in the bear market, it hits different than a bull market. Because if you meet people during a bull market, like sometimes I'm like, are you going to be here in 2 years? Like, I'm not sure I'm going to like expend my time engaging with you when I don't know you're going to be here in 2 years. When you meet people in a bear market, you don't have that query. Like everyone understands like, oh, we are in it. We are here together. And so like, it's just easier to build a network in that context.
Honestly, I think all 4 of these could be its own separate like a post or podcast that we talk about, but could you talk about number 4 for a minute? Because I consider you very good at this, building a network and meeting as many people as you can. And so what does this mean in crypto? Like networking, right? Does this mean you're going to crypto conferences and handing out your business card?
Mm-hmm. No,
like what?
It does not mean
how
that.
do you act? Okay, it's not that. So how do you actually meet people, and how do you find the right people to meet? Because there's definitely an 80-20 rule with respect to the people. Like you want to find the kind of the 20% that would deliver 80% of the value, to include in your network and get in a relationship. So how do you even screen those people? How do you find them? What's your method?
It's a little bit about, are you seeing the same people on a reoccurring basis? And this works both inside of conferences in real life, but also Twitter too. You can build a network on Twitter, is what it is for. And so if you are showing up on Twitter and providing value on Twitter, you will just naturally grow followers. And then you'll also start to become first in Twitter. You'll see other people engaging in your tweets, and you can grow a network on Twitter. And this is when Ryan said, like, don't be afraid to slip into someone's DMs, grow a relationship that way. So, and Twitter is just like the precursor to in real life conferences, by the way. And so when you are tweeting and stuff and you are engaging with people and others, you will see many of those people at conferences. And then when you go to your second conference or your third conference or just meetups in general, you'll start to see the same reoccurring cast of characters. And you have to be social, and you have to be able to go up and say hi. Yeah, you're gonna go into our Twitter DMs.
Yeah, I'm going into our Twitter DMs and scrolling up, and to actually track this. When did we first start talking?
Wow, was my first DM to
tweet.
you in December 1st, 2018? I said to you, I do not understand the resistance to Ethereum on behalf of so many Bitcoiners. It is utterly confusing to me. Wow, we have not changed at all.
That was the first DM you sent me, and then I said, I've been trying to figure this out. Well, at the core, the value systems appear so similar.
Wow, we have not changed tune whatsoever.
Yeah, and then back and forth. Maximalism is blinding. This is the beginning of a conversation we had where, David just got in my DMs, and I was reading some of his work that he was posting on Medium, and then from there it developed. It took a while. It took many months for us to start like working together on the newsletter, and then eventually starting a podcast. But that's where we started in the depths of the bear market in 2018.
Yeah. Wow, 2018, what a throwback. Anyways, just something to consider is optimizing for luck surface area, which means putting yourself out there, putting value out there. Like when you are investing in yourself and acquiring skills, make sure you find a way to broadcast those skills so you can let people know that you're a useful person. And then just start growing the relationships in ways that create serendipity. And that could be true on Twitter, that can be true on Substack, that can be true in real life events, that just casual meetups. But I would emphasize that in real life meetups do provide value that you kind of can't get in the metaverse, because it's like humans meet face to face, Ryan.
I feel so attacked right now. Well, let's talk about some of the gems piece of it, right? Of course, everyone listening knows we are bullish ETH, and you'll find that out even more when our episode on Monday comes out. There's some other gems in this market too. Ryan Selkis was recently on the Bankless podcast. He called a bottom for DeFi. I think there's some really interesting DeFi tokens out there. Again, not financial advice, but that's something that I'm looking at. Also, even in the public markets, David, this is a tweet from Matt Hogan about Coinbase. What's he saying here?
Yeah, so he tweets out saying, Coinbase raised money in 2018 at an $8 billion valuation. It is currently trading at a $9 billion valuation. Meanwhile, revenues are up in that same time frame from 520 million to 3.3 billion. Users are up from 22 million to 101 million. And assets on the platform are up from 11 billion to 101 billion. So same valuation going back 4.5 years. But meanwhile, all the metrics are up about a 5x, 5 to 6x, sometimes a 10x on assets on the platform. So like, dude, the Coinbase stock hit a low of $35 when it opened up at like something like $450. Like, Coinbase stock is going to be like one of the most generational buys of all time. It's got to be. Not financial advice. I don't own any because I don't own in stocks, but whatever.
Yeah, I mean, these numbers are pretty compelling, to be honest. My only question whenever I have some money to dollar cost average in is, okay, should I do this or should I go buy some more ETH? Right. It's kind of the question, because they're certainly correlated. Anyway, there you go, guys. A lot of things you can do during the bear market to keep busy. David, what do we have coming up next?
SBF coming home, extradited to the U.S. Prison wasn't so great for him, so he wanted to, work his way home. Brian Armstrong makes regulation proposals that we wish that we had, and also Visa steps into the Ethereum frontier. What does that mean? All of this and more right after we talk to some of these fantastic sponsors to help you go bankless.
The reality today is that 5 corporations control the entire world of social media. They own our names, they restrict our content, they monitor our every move. And their time is up, thanks to our sponsor, DESO. DESO is a layer 1 blockchain built from the ground up to decentralize and scale social networks. With DESO, you can own your own identity, content, and social graph, and take it with you across hundreds of applications already built on the censorship-resistant DESO blockchain. DESO's storage advantages make it finally possible to build infinite state applications that can efficiently store and index large amounts of content and data fully on-chain. DESO also offers multiple crypto-native monetization primitives for developers and creators, including social NFTs, social DAOs, social tokens, and social tipping. So in order to experience the social layer of Web3, go to DESO.com and claim your username. That's DESO.com. TRUEFI is DeFi's largest credit protocol, connecting global lenders with institutional-grade lending opportunities. TRUEFI has completed over $1.7 billion in originations and paid out nearly $35 million to lenders, proving that DeFi is ready to take its next big leap into the $8 trillion credit market. TRUEFI gives lenders like you access to sustainable, high-yield opportunities backed by real-world investments, usually reserved for high-net-worth individuals. At the same time, fund managers use TRUEFI's financial infrastructure to bring their portfolios on-chain, benefiting from the global liquidity, cost savings, and transparency of DeFi. TRUEFI is a decentralized financial utility. The protocol is owned and governed by the TRUEFI DAO, and TRUEFI is here to bring DeFi into the golden age, bridging the power and access of crypto with institutional-grade lending opportunities and portfolio tooling. Explore the diverse financial opportunities available on TRUEFI or launch your own portfolio at TRUEFI.io.
SBF back in the USA. Maybe not of his own will. I'm not sure. There's an extradition here, but it sounds like the prison system in Bahamas left something to be desired. We'll talk about that. Just, I guess, getting into this again, Jake Chervinsky had a fantastic summary. He tweeted this out. 2 months ago, SBF was debating the future of crypto policy, and nobody knew FTX was a sham. 1 month ago, SBF was apologizing for losing billions, and everyone worried he might get away with fraud. Today, SBF is in FBI custody, and his chief co-conspirators have pleaded guilty. It's amazing how fast all this has unfolded. Jake says, it's very rare to see criminal prosecutions move so quickly. That's the high-level context. Look how fast all of that happened. 2 months ago, SBF was on this podcast debating crypto policy,
right?
And now he's in jail. and in FBI custody. So I don't know if this bodes well for other previous Bankless guests.
Other guests, please don't take that too seriously.
Yeah.
Just don't steal customer deposits. It's fine.
Look, it's honestly not that hard to do well in crypto, but just by playing long-term games. But SBF was clearly not playing that. So give us the story. It sounds like SBF was having a bad time in jail in the Bahamas. What were the conditions like, and what might have led to his extradition to the U.S.?
So the conditions of the Bahaman Jail are not great. There are like buckets, for example, that are required for all inmates. You can guess what those get used for. There was This report says cells were infested with rats, maggots, and insects. I'm just going to go ahead and guess that it was a miserable place to be. And so it made it really easy for SBF to just like wave the white flag and say, fine, just extradite me to the United States. If that's how it happened, that kind of makes sense. I don't really know if that's how that happened, but that's what people are speculating as to how bad the Bahamian prison was. Just like SBF was like, fine, extradite me.
He's like, I don't want to spend Christmas here.
Yeah, exactly. Yeah, send me home to mom and dad. So now he is in New York City. So that was last night at the time of recording. So Wednesday night, Thursday morning, he was flown from the Bahamas to New York City in custody of the FBI, and that is where he currently resides. So SBF, wow, looking unshaven and unkempt and definitely pretty sweaty, being escorted off a plane that is a photo of him being escorted onto a plane in the Bahamas.
Definitely a different climate he's entering in New York City at this time of year.
Yeah, for sure. He's probably cold. Interesting is that Alameda's Caroline Ellison and FTX's Gary Wang have pled guilty to the Department of Justice fraud charges and also have settled with the SEC and CFTC.
They've already settled?
Apparently, either that or looking to settle. Yeah. So they have been talking. The SEC and also CFTC has charged Ellison with market manipulation of the price of FTT. No surprises there. But it looks like that they are moving faster than SBF is when it comes to going down the prisoner's dilemma rabbit hole.
You have to wonder what those private conversations were like, but I bet it was a lot of like full cooperation, and I'm happy to rat SBF out, and I have no loyalty to him. I bet it was some of that. Maybe that's why this case is moving so fast.
Yeah, perhaps. Yeah. What's also interesting is that now that this asset recovery program has started, they're actually starting to find money. So a new headline out of Defiant says FTX finds $1 billion of inside of hundreds of company bank accounts.
What?
So with no less than $720 million of cash. So it's not like illiquid FTT tokens. They found $720 million of cash.
In hundreds of bank accounts. Hundreds of bank accounts.
This kind of feels like with me and my multiple times I got the Uniswap airdrop because I was too chaotic to own my own Ethereum addresses, so I just had like 20 of them instead.
Cushions.
Yeah, the couch cushion. But I didn't have customer deposits. Yeah.
EarnifI could help with this, guys. If it was these were all DeFi wallets. But so they're just like searching the couch cushions basically. But you know what's impressive? Hundreds of company bank accounts. And have you ever seen those pictures of the org structure of this FTX empire in Alameda and all of the companies and sub companies and joint ownership things? It's an absolute mess.
It looks like a circuit board.
I'm almost blown away by the complexity of this and how he was able to accomplish this. Yeah, that's almost like, FTX has only been around for what, like 4 years, something like this?
Yeah, less.
It's like starting a new bank account like every couple of days. Every 2 to 3 days, you're starting a new bank account, forming a new company.
That's got to be somebody's job.
Like, how do you even do all of this? It's impressive at that level from a scam perspective.
From a scam perspective. Anyways, in addition to just finding their own money, they have also engaged in clawbacks. And so there's an article out of The Guardian says, FTX intends to commence actions before the bankruptcy court to require the returns of such payments, political donations, with interest accruing from the date any action is commenced, sharing an email address ftxrepay@ftx.us that recipients could use to voluntarily return money. Recipients are cautioned that making a payment or a donation to a third party, including a charity, in the amount of any payment received from an FTX contributor does not prevent FTX debtors from seeking recovery from the recipient or of any subsequent transferee, they added in a statement, basically saying, hey, we're coming for you. Hold on to that money because that's ours.
Don't spend it.
Don't
politicians,
spend it. Yeah.
The politicians, the celebrities, the charities. This means, I guess, Kevin O'Leary will have to give back his $15 million. Do you think this means the
I bet he actually keeps it because that was actually a payment to him. You think?
So that's different? I don't know. I don't know. I'd be interested in it, like
donations, I think. I mean, so they signed a contract with Kevin O'Leary, I'm assuming. But he should give it back anyways.
What are he definitely should. I kind of wonder about Kobe and Ledger at Up Only, if they'll be subject to this clawback too.
Yeah.
I mean, it's not a ton of money, but
because it's like it's a contract that they signed with them for services.
And they've rendered the services?
Yeah, and they performed the services, and I don't know.
I don't know either.
What constitutes a clawback?
Look, definitely if you're Kevin O'Leary, you should give the $15 million
if you're Kevin
back.
O'Leary,
if you're a
back.
politician, you should definitely give the money back to you. That's a really bad look to just keep that money and spend it on campaign financing.
The headline of this is FTX seeks to claw back donations to politicians and charities.
Do you know, I feel like I have closure on SBF at the end of 2022. If he wasn't in jail, if there wasn't prosecution ongoing, I would have felt like we were wounded in 2022 and the wound is still open. It's still raw. But now it feels like, starting to scab over.
We can heal. Yeah, exactly.
We can heal. And so that feels really good going into 2023.
It was nice hearing Jake Stravinsky say, wow, it's surprising how fast this went, because in the middle of it, it was like, why isn't he in jail yet?
It didn't feel fast.
It did not feel fast. He's getting away. We're watching him get away with it. Oh, he's in jail. Just kidding. Nice.
Yep. All right. Well, in the meanwhile, Brian Armstrong was actually putting together a regulatory proposal in his post about this. This kind of reminded me of the antithesis of SBF's
the inverse
post on regulatory that happened 2 weeks ago, or sorry, 2 months ago, I guess. And this is a post from Brian Armstrong. I tweeted this out less than 60 days ago. I read SBF's crypto regulatory proposal. It was hot garbage, and it turned out so was FTX. The proposal we saw from Brian Armstrong was much more practical and saying, here's the full post on Coinbase. What's the TLDR of this? What is Armstrong saying? The title of this post is Regulating Crypto. How do we move forward as an industry from here? What is he saying about how we move forward, David?
Yeah, there are three pillars that he puts into this proposal. One is create regulatory clarity for centralized actors. No surprise there. He names three further centralized actors that he wants clarity for: stablecoins, exchanges and custodians, and commodities and securities. So making it more clear as to who can issue a stablecoin and how that can be structured. He even gives a little tidbit as to if you're a bank, you can issue a stablecoin and do fractional reserve if you are going to be compliant in all the banking licenses. Exchanges and custodians, of course, need more regulation there. And then also commodities and securities just need clarity on what's a commodity, what's a security. Things we've been asking for forever. And so that's the first pillar. The second pillar is enforce a level playing field. This is definitely a tip of the hat to how onshore United States exchanges felt super hamstrung to just the amazing set of products that FTX was able to produce because they were not onshore. And so in order to be competitive, our American exchange, and also keep American US money onshore, we need our exchanges to be competitive. So that's number two, enforce a level playing field. And three, let innovation happen in decentralized crypto. Brian Armstrong always keeping DeFi in mind and saying hey, the whole point of crypto is to be decentralized and do decentralized stuff. So let that thing grow and regulate the centralized actors like Coinbase appropriately. These are three fantastic pillars. It was so refreshing to read this thing. It's this makes just so much rational, logical sense. We don't even have to overthink this. Thank you, Brian, for posting this.
Yeah, and I mean, part of this was in the DCCPA, right? Definitely part of kind of the exchange regulation. There wasn't as much on stable coins. But there was in the DCCPA, the legislation of which SBF was a proponent, some language about securities versus commodities and some clarity there. There was a little something. I don't know if it went as far enough. But the difference is with the DCCPA is it basically treated all of DeFi as if it was a centralized exchange. And required similar levels of compliance and registration, even down to kind of like the front ends. Absolutely terrible piece of legislation that SBF seemed like he was crafting in order to like pull up the ladder on all of the innovation that would come after him and install protections for FTX. Now, this is not what Coinbase is saying at all, not what Brian is saying at all. And, I think he means it. I hope he means it. But this at least is sensible, right? Let's kick the can down the road for DeFi. It doesn't need this level of regulation at this point in time. The easy wins clearly here in the US from a regulatory perspective are stablecoins. Let's do the thing where we get a Bitcoin ETF and it's actually a Bitcoin ETF. Let's finally hear with complete clarity from our regulators and lawmakers that ETH is not a security. Like, can we just do that? I mean, these are the easy, low-hanging fruit stuff that where you can kind of institute this and allow DeFi to continue to flourish in the US. So it seems like a no-brainer to me. It's, of course, not the perspective of all lawmakers here, but this is a refreshing take on things. And
I think certain like status lawmakers are going to look at this thing and it's like, but how do we surveil people and stuff like that, and stuff that's like we're just not going to be able to come to terms with.
Exactly. Yeah. And that's where I'm happy to fight the battles. But this meme of like, people in crypto don't want any regulation. No, we don't want dumb regulation.
We don't want your regulation.
We don't want, yes. If you're going to make regulation mean ban DeFi effectively, then like, no, that's dumb. Don't do that. David, there's some cool stuff going on at Visa though, stepping to the frontier. What's this about?
Yeah, so global payments giant Visa signaled stronger and sustained interest in crypto, releasing a paper outlining how the firm could one day collaborate with the Ethereum network on automatic payments. And so they released a document, a research document of sorts, talking about account abstraction, which is a 400 level Ethereum topic, crypto topic, and how account abstraction wallet could enable Visa to set up automatic payments for monthly bills. So inside of this article, here's a quote. Many of us rely on automatic payments to pay monthly bills. In a few simple steps, we can set up reoccurring payments with a local utility or subscription provider, with blockchain technology potentially representing a new way to process payments in a distributed and programmable fashion. Could this everyday payment experience be replicated or even improved on the blockchain? With the punchline, Visa is exploring exactly that. And so this is a technical piece where Visa outlines how to write a smart contract app for a self-custodial wallet, where that wallet is maintained exclusively by the user and the user has the private key. And the application allows a user to set up a programmable payment instructions to push funds from their self-custodial wallet to another wallet at reoccurring intervals without using the user's participation at each time. Basically, an automation of what a lot of just commerce is, but Visa is exploring how to do this with self-custodied account abstracted wallets on Ethereum. And they are researching, they are pushing the frontier here. So this is super cool.
Self-custodied reoccurring payments is a fantastic use case and bypasses the banks completely. How cool is that? You know what else is cool, David, is this is actually a hackathon project that they've implemented. And account abstraction is not yet available on Ethereum on the mainnet, but it is available right now in Starkware, in the Starknet ecosystem. And so they actually built this fully out on Starknet using Argent as the wallet. This is another example, I think, of like the Ethereum mainnet will be sort of more conservative for a while. And some of the innovation, like we already have account abstraction in Starknet, some of that will start to happen in layer twos. Is incredibly bullish in terms of how we push this industry forward using sort of layer twos as our frontier for innovation and technology. And they could deploy this kind of thing on a layer two, even absent the Ethereum mainnet supporting account abstraction. Super cool, man.
Yeah, great stuff. Great stuff. All right, coming up next, the metrics behind the Trump NFT drop. I know y'all wanted to hear exactly how many newbies bought Trump NFTs.
No, we were here for your Trump impression, David.
I got none more of that. So Ryan, what do you think? More than 50% new buyers, or more than 50% of them are NFT speculators?
Ooh, I'm going to go with new buyers, more than 50%. I think
right.
this reached an entirely new audience.
All right,
I was
we'll
not
see.
compelled by it, but
We
I
will
think
see.
others would be.
Yeah.
Okay.
The other things as well, Ren protocol is in trouble. Ren, the bridge that puts assets on one chain across to another chain. We'll talk about that. And also Binance bailout. Not a bailout for Binance, but Binance bailing somebody out who is getting bailed out by Binance. All of this and more right after we talk to some fantastic sponsors to help you go bankless.
Sequence is the all-in-one developer platform you need to build Web3 games and applications. For your users, Sequence is a smart wallet, and it's the easiest, most intuitive onboarding your users will ever experience, and comes with all the features users need to feel empowered in the Web3 world. Multi-chain support, NFT display, and users can buy SFTs, NFTs, and crypto directly with a credit or debit card. For developers, Sequence is the plug-and-play platform for Web3 games and apps. Their APIs let you bring NFTs, SFTs, and tokens into your game or application. And a Sequence relayer enables gasless transactions for your users. Sequence already powers some of the best Web3 games like Skyweaver, NFT projects like Cool Cats, and marketplaces like NiftySwap. And Sequence is compatible with all the EVM chains, including Ethereum, Polygon, Binance Smart Chain, Arbitrum, Optimism, and Avalanche. So go to sequence.xyz/bankless to start building, or speak with the Sequence team today. If you've been listening to Bankless, you know that we're fans of the modular blockchain thesis. The idea that blockchains will separate execution from data availability and consensus, allowing all three to become the best versions of themselves. And Fuel has built the fastest modular execution layer in the industry. By supporting parallel transaction execution, Fuel unlocks significantly faster throughput for the Web3 world. Fuel also goes beyond the limitations of the EVM with its own Fuel VM, which is more efficient and optimized, opening up the design space for developers. And lastly, Fuel brings a powerful developer experience with its own domain-specific language, Sway, and a supportive toolchain called Fork. With Fuel, you can have the benefits of smart contract languages like Solidity while adopting the improvements made by the Rust tooling ecosystem, letting the Fuel development environment go beyond the limitations of the EVM. If you want to learn more, there's a link in the show notes to see how you can get involved with the Fuel network.
It was recently announced that MoonPay, the on-ramp, is now integrated directly into the Uniswap front end. So you can now buy tokens on Uniswap directly through Uniswap using MoonPay. That's got to be one of the fastest on-ramps into Ethereum that I can think of. Direct to Uniswap, just straight into the shitcoins, you know?
Well, you don't have to. That's a choice. Look, there is great personal responsibility when it comes to crypto, because you can literally buy anything on Uniswap, and it's completely up to you. But this is really cool. This is a screenshot of how it looks, and you can see this is fully integrated into the Uniswap app, where you could just buy crypto directly from Uniswap. So save a step in the process and not have to transfer through an exchange.
I wonder if we're ever going to see PayPal there.
I would imagine so. I mean, there's
PayPal
going to be
to
all
Uniswap?
sorts of different on-ramps are a big deal, like a big
Huge,
freaking deal. And it's cool to see some of these larger companies getting in the game there. But David, what's going on with Ren protocol? First of all, what is Ren protocol? Because it's been a while since I've heard that name, actually. Right. And last I recall, it was like some sort of a cross-chain asset bridge of some sort. So if I wanted my ETH on, if I wanted my Bitcoin on ETH, I could use Ren in order to get there somehow.
Yeah, that's exactly right. Yeah, so Ren BTC is a token that you could buy on Uniswap. However, with this news, I wouldn't suggest it in this present moment. But it was basically this. Think of this like just like a mesh layer between many chains. A very ambitious project. It's like a mesh layer between many chains that had its own token called Ren. And Ren was the asset that economically secured all of the cross-chain transfers of assets. So it was like a bridge, but a hyperlinked bridge across all the blockchains. At least that's what the vision was. It was actually bought by Alameda back in February, shortly after being bought by Alameda, started supporting Solana, because in hindsight, now we know that we need to do everything we need to do to prop up the price of Sol, because that's what Sam was using as collateral, but I digress. Anyways, now that Alameda bought Ren and then is now defunct, there's no more funding for Ren. And so according to this article, Alameda was contributing $700,000 per quarter to keep the Ren operation going. And during a community call last month, Ren revealed that it only had $160,000 left in funding, only enough cash to get down to the end of the year. And so there's probably further details about what this means if you are a holder of REN tokens. So click that link in the show notes to go dive down that rabbit hole to see what you need to do. But the REN 1.0 network is shutting down. And they are saying that compatibility between REN 1.0 and 2.0 cannot be guaranteed. So if you are a holder of REN 1.0 assets, you should probably do something and something I mean like go back to port your REN tokens back to their native assets. So definitely pay attention to that if you are a holder of any REN tokens.
I've never been a huge fan of this sort of bridging personally.
It's always
I've never
felt
gotten
insecure.
into it. I'm glad that it's there as an option, but also not glad because I think it provides a false sense of security, because really the security of that REN Bitcoin on ETH is kind of backed by the value of REN, the token itself.
Yeah.
And it was always
and
unclear
and the security of the protocol too, which is also unknown.
Yeah. I'm not particularly bullish these types of bridging solutions, much more bullish kind of layer twos and trustless bridges.
They seem to be a very seasonal thing, because I remember this being a topic of conversation during the height of the last bull market. Like during the last bull,
interoperability.
Interoperability. It's always a meme, and it seems to be like one of these things that gets a lot of funding during the bull markets and starts to work during the bull markets and then breaks during the bear markets every single time. However, I will say that REN actually did stick around throughout last bear market. It has been around for 2 cycles. Perhaps no longer.
Perhaps no longer. Let's talk about ETHGlobal. What's happening in 2023? Like all around the world, there's 18 different hackathons. Is that right?
Yeah, so many. Yeah, so ETHGlobal released their big 2023 schedule. So if you are a developer who is a hackathon attendor, here we go. Scaling Ethereum in March, ETHGlobal Tokyo in April, ETHGlobal Istanbul in May, ETHGlobal Toronto in June, Paris in July. That's right after ECC. New York in September. I'll probably be there. And then ETH Online in October, and then ETHGlobal at DevCon sometime in 2024. So if you are a hackathon attendor, their schedule is out. So mark your calendars for 2023.
Build market. That's what we're doing here. We're building. DevCon. Has that location been announced yet, David?
No, it has not.
Okay. We'll have to see. I'm waiting with bated breath. All right, let's talk about those Trump NFTs, baby. Trump made, did you know this? I don't know about your 50% question earlier, but I do know he made about 6.7 million on NFTs last week. And I also know, David, for Trump, that means he ain't leaving. Yeah. He's here to stay.
Trump NFT drop in 2.0 coming very soon.
Yeah, I mean, I should mention all of that money probably didn't go directly into Trump's pocket. I'm sure this was some sort of licensing deal where some third party was doing this on his behalf. But he got a sizable cut using his likeness and the Trump brand and his face and his muscly, chiseled body on some of these NFTs that had to come with a cost. So give us the stats. What is the case? Is are a bunch of new NFT users in these Trump NFTs, or are these the same old degens that are now like aping into Trump NFTs and dumping them?
Yeah, so 0x Sydney put together a fantastic thread detailing some of these metrics. So about 15,000.8 total holders, and about 65% of that, about 10,000 wallets, only hold one card. So that's a pretty good distribution, I'd say. So like skipping down to, let's go down to.
Wait, 1 second here. The largest whale is the team, and they have 1,000 cards. I thought somebody bought 1,000. The second largest holder has 329 cards.
All purchased from the secondary market. They didn't even mint it.
Wow.
Okay. And like the particular person who bought 329 cards on the secondary has transactions in their wallet that goes back to 500 days ago, both on Polygon and on Ethereum. So this
it was Donald Trump Jr. He bought those.
The person that paid for the highest sale was a whopping 37 ETH, and they own 24 Trump cards, all purchased from secondaries. Wow. Paid a total of 72 ETH across the entire collection. Wow.
$84,000.
Yeah. Okay.
Hope they're doing okay.
Yeah. About 9.7 thousand holders do not hold any Matic or Ether, which means that they are likely a first-time NFT purchaser that probably paid with a credit card. So that is our assumption of these are all first-time crypto users. 9.7 thousand people bought one Trump card, and they don't have any ETH or Matic in their wallet, means they don't have any gas to pay to transfer those things. So if you do the math, 9.7 are crypto noobs, 12.8 total minted the collection. So that brings us to a whopping 76% of new crypto users because of the Trump NFT. Wow. Wow.
Okay, so what do we do here? More private keys in more hands is net good thing, right? More NFT use.
That's what we say.
Net good.
We got people onboarded.
Onboarding people to crypto. Look at the floor price of these things right now. It's 0.23 at the time of recording.
0.23 for 45,000 units?
Is that really true? 45,000 items, yes.
Yeah, at 0.23, almost a quarter
ETH.
of an ETH. What the absolute F, dude? That is insane.
I don't think I've paid much attention to these things. It's basically pictures of Trump.
That's $276 for a floor NFT, and the minimum price was $100. So
it does not appear to me like a lot of time went into these things. It's just Trump.
No, this is one
backgrounds.
picture of Trump with different things photoshopped on him.
Sunglasses,
There is
cowboy
only
hat.
one photo of Trump.
The entire collection is just one Trump photo.
It's just one Trump photo, and then he has different backgrounds, different suits, different bodies, different hats, but it's just one Trump photo.
Look, I am not a NFT aficionado, but I might call this a low effort NFT, David. I don't know your take
Man, they
on
made
it,
45,000 of them.
That's a lot of quantity. I
Yeah.
don't know about the quality though.
One,
teach their own, though.
One stance, one photo of Trump.
It's
wow.
just a JPEG. You buy the JPEG. I hope everyone knows. And I guess getting onboarded into the Polygon network as a result. I wonder how many of those users actually learned how to use MetaMask through this, for example.
It must have been a lot. Yeah. Oh, this was funny. Did you see this tweet thread? So this was a tweet thread because there was one photo, right? So where did they get all of the bodies?
Yes.
And so apparently these are all Shutterstock images that they just pulled off of a Shutterstock image and then slapped it onto Trump's and edited it for a little bit. And there's so many examples of these of where they got the tuxedo for Trump and then they just slapped it on there. It's just the most on-brand thing I can think of for Trump. Just one Trump photo, 10,000 Shutterstock stock images just slapped on there. And they for a Photoshop job, they look pretty good and also crushing it. Yeah.
Also crushing it in terms of volume and sales. Pretty amazing there.
Yeah.
All right. Well, Trump is here. So is Reddit, of course. Reddit, they just launched another free NFT collection. They've been crushing it toward the end of this year. 5 days ago, it's called the Recap 2022. This was free, but it already, David, has 1.3 million owners. They call these not NFTs in the Reddit ecosystem. They call them digital collectibles, and the community is definitely collecting them. 1.3 million owners of this thing. This is all happening behind the scenes. I think that's pretty amazing as well.
Yeah, and mainly, I would say the majority of these people don't know that they're NFTs because there's no trading volume on these things. They're not getting transferred around.
Right. Here is a graph from Hill Dobby, and this is maybe a sobering graph of some of the NFT market from 2022. What are we looking at here?
Yeah, so this is wash trading on Ethereum NFT wash trading volume. And there was basically zero wash trading up until about, I think, the start of this year, maybe January of 2022. And, you said sobering, but also, Ryan, remember, this is when Looks Rare launched. And Looks Rare
incentivized wash trading, basically.
Trading in general, which created wash trading.
And what is wash trading for people who don't have a crisp definition of that?
It's when you buy and sell an NFT immediately. And so perhaps you do that from one wallet to another. You do it to a friend. You just do fake trade. It's not a real trade. You fake a trade.
And why would you do this? Why are you trying to fake
a whole
volume?
number of reasons. For Looks Rare, it's to earn the Looks tokens because you were paid for volume on Looks Rare. You can also do it to launder money if that's your vibe. Don't suggest it. You can also do it to do tax loss harvesting as well. There's plenty of reasons to wash an NFT trade. Some legitimate, some not legitimate. Anyways,
so this graphic is showing a lot of the volume. Does this say 44% of the volume traded in all of 2022 was wash traded?
Yeah, looks like it. Yeah, it was definitely concentrated in the middle of the height of the mania. It's definitely come down now, but wash trading is probably going to be a thing that is just, I'm not going to say plagues because again, it's not inherently negative, but it's going to be something that's like always going to be a part of the NFT industry.
I love that you can see this all on chain though, right? And this is sort of a citizen journalist type, Hill Dobby, who's constantly coming up with these fantastic analytics.
Dune analytics master. Yeah.
Yeah, he's just crazy at this. Christie's down kind of bad from an NFT perspective, at least from those 2022 highs. Their sales, Christie's NFT sales fell 96% in 2022. Not unexpected. But when you look at these numbers, David, art auction house Christie's sold 87 NFTs for a total of 5.9 million in 2022, and that was down 96% compared to 2021. So must have been hundreds of millions previously. Yeah, 150 million in 2021. So a down year for Christie's from that perspective.
Yeah, I just don't think anyone's surprised by this. And also Christie's continues to make investments and efforts into building out like virtual auction houses for NFTs for moving forward. So even though they're down, I think they are still bullish.
Look, they're so psyched about the new growth opportunity that they didn't previously have. And now we have digital art. Let's talk about some more digital art that's coming, a digital collectible. This is the last in a series of 5. We are calling the Genesis collection, where you can get an NFT of 5 of our favorite Bankless podcasts. And this is the original collection. There's only going to be 5 of these. The last one is getting issued tomorrow. And the last one is another one of my favorite episodes of all time. David, what are we releasing tomorrow?
The 5th of 5 of the Genesis collection is, of course, none other than Vitalik Buterin. Who else could it be? And we are going to tokenize episode 99, Endgame, which I think was a fantastic episode about the long-term philosophy of the Ethereum roadmap. And not just the technical details, but why it is what it is. So if you want to collect the Ethereum roadmap as a podcast with Vitalik Buterin, that is available at collectibles.bankless.com at noon Eastern time on Friday, tomorrow. Today, if you're listening to this tomorrow, Friday. Sorry about that.
It's today. It's the 23rd of December, 12 p.m. Eastern.
Thank you.
You can pick that up. And the previous ones have gone fast, like the Drake one.
3 blocks. They're sold out in 3 blocks.
Yeah. All right, let's talk Bitcoin stuff. And I guess the story around Bitcoin right now is a bunch of Bitcoin miners going bankrupt or on the verge of bankruptcy. What's this one, David?
Yeah, Core Scientific, which is one of the bigger Bitcoin miners out there, has filed for Chapter 11 bankruptcy protection. It's one of the largest publicly traded mining firms, still generating positive cash flow, but just not enough to pay back the debts that it owes. And so when energy prices go up, which energy prices are up big right now, and also Bitcoin prices go down, Ryan, that is bad for the mining industry. That is not what you want. And so Core Scientific estimated assets and liabilities is at between $1 and $10 billion, $1 billion of assets, $10 billion of liabilities, and has between 1 and 5,000 creditors per its filing. Oof.
Well, here's the thing, David, is this always ends up leading to consolidation, doesn't it?
Yeah.
Because who's going to buy these assets? A stronger, healthier Bitcoin mining company that was able to weather this storm. They're going to end up purchasing these assets. And so the big fish get bigger, and the smaller, weak fish get weeded out and they die. And then you get increasing consolidation.
Mm-hmm. That's always been my take as well. That like the destruction of Bitcoin miners at the bottom of the bottom of the bear always leads to consolidation. When I gave that take to Bitcoiners, they say, well, actually, the biggest fish dissolve, and a lot of the cheaper fish, smaller fish, get to buy up discounted mining equipment. So that was their retort to that.
I don't know that practically happens, just because the economies of scale and the risks to launch it, like injecting enough capital to launch something like this, are so large these days. In particular, like you have to have a lot of capital in order to inject this.
Makes sense to me.
The Bitcoin take on this is interesting about proof of work is that it's a free market, anyone can enter. Mm-hmm. But actually, I find staking much more compelling from that perspective. Yeah. Uh-huh. As a solo staker is never going to have to go bankrupt and go out of business, are they?
Mm-hmm. You don't need to invest to get ahead of your competition. Yeah. You just put Ether into your validator.
It's interesting, and I think more might be ahead as they weather this storm. But let's talk about Binance. All right, maybe Binance is doing the thing that FTX could not, which is actually purchasing Voyager and helping to bail out some of the Voyager depositors. refresh us. Who is Voyager again? And what's the story there, and what's Binance doing?
Yeah, Voyager is the digital currency exchange that gave a $660 million unsecured loan to Three Arrows Capital, who vaporized that loan and was unable to pay Voyager back, which caused Voyager to go into bankruptcy. And now Binance US is now looking to acquire. But no, not before Alameda attempted to bail out Voyager. So Alameda gave, I think, Voyager like a $250 million revolving line of credit to maintain liquidity. And then Alameda went bust. And so here we are. Now Binance US has won a $1.02 billion bid to buy Voyager Digital and all of their distressed assets. And so this is looking like this is going to happen. So cool, I guess. This is some light at the end of the tunnel for anyone who had assets inside of Voyager. You might be able to get your money back as a result of this.
Are we worried about this, though? Is this like, I mean, I'm feeling a little bit of deja vu. A big crypto banker steps in, not SBF this time, it's CZ, going and buying the assets. It feels kind of similar to a recent pattern. But
yeah.
Is CZ different than SBF though? That's the root question.
Is it ridiculous for me to say, like, let's just give CZ the benefit of the doubt? I don't know. He made it through 2 market cycles. And he's doing the main character thing right now, which is a little bit concerning, but like, I don't know. He hasn't indicated anything that Binance is completely Binance is above board as far as I can tell.
That's the thing. That's the end statement is as far as we can tell, and we don't know for sure. But I guess the other option for Voyager was what? Complete Chapter 11 bankruptcy, go bust, death. So this has got to be at least better than that. This is a lifeline. This is some hope. So we'll see if Binance and CZ can pull this off. This was a take, David, I saw this week. So this is the Senate banking chairman says when asked about banning cryptocurrency, maybe could be a good idea. Not too sure. Here's a quote from him. Maybe banning it, although banning it is very difficult because it will go offshore and who knows how that will work. Some of the senator type conversation is absolutely maddening to me. A message to Sherrod Brown. You said banning it would be very difficult because it will go offshore. Let me give you another reason why it's going to be difficult. It's going to be difficult because we will fight you the entire time. These are our digital property rights, Senator Brown. These are important. This is not only difficult because it will go offshore. It's difficult because this is a breach of our constitutional rights to own these sorts of assets and to preserve our privacy. So I think...
Also, I got news for you, Senator Brown. It's already offshore. If you ban it here, you're just banning your own citizens from accessing something that already exists. It's not going to go offshore. It's on the internet, bro.
I think some of this is posturing, similar to the kind of.
I think some of this
Warren
thing
bill.
is just being uneducated about how this works. Maybe we'll ban crypto because I'm a regulator and I can do whatever the hell I want. I'll just ban that. Oh, you like that? I'll ban it. No, bro. Like, it's not how it works.
Yeah. Anyway, this would obviously be challenged in court. There'd be a lot of reasons why crypto is going to be difficult to ban, including, as he rightly points out, that it would be completely ineffective and counterproductive. So let's hope logic holds as we get into 2022.
My God.
David,
all right.
jobs time. This might be the last time we tell you in 2022 that you should get a job in crypto. Even now, even during the bear market, it's a good time
Especially
to work
now.
in crypto for companies that are hiring. I'm going to read out the jobs on the jobs
and
board.
Bitcoin denominated salaries are at all-time highs right now.
Silver lining, I love it. Alchemy's hiring a back-end engineer. Uniswap Labs, they need a senior front-end engineer. Diagram Ventures needs an associate for crypto venture creation. Rabbit Hole, business operations person. Diagram Ventures is continuing to hire 2, I guess, crypto venture creation specialists. MakerDAO needs a legal counsel. I could go on, but I don't have to because these are posted on bankless.pallet.com/jobs. And you can get a job in crypto and start 2023 off right. All right, David, what do we got coming up next?
Coming up next, we got some hot takes from crypto Twitter, and then Ryan and I take some time to shit on Wells Fargo because, it's the end of the year. You gotta punch them on the way out. And then, of course, we got the meme of the week. So all of that and more First, though, we have to talk to some of these fantastic sponsors to help you go bankless.
ARBITRUM 1 is pioneering the world of secure Ethereum scalability and is continuing to accelerate the Web3 landscape. Hundreds of projects have already deployed on ARBITRUM 1, producing flourishing DeFi and NFT ecosystems. With the recent addition of ARBITRUM Nova, gaming and social dApps like Reddit are also now calling ARBITRUM home. Both ARBITRUM 1 and Nova leverage the security and decentralization of Ethereum and provide a builder experience that's intuitive, familiar, and fully EVM compatible. On Arbitrum, both builders and users will experience faster transaction speeds with significantly lower gas fees. With Arbitrum's recent migration to Arbitrum Nitro, it's also now 10 times faster than before. Visit arbitrum.io, where you can join the community, dive into the developer docs, bridge your assets, and start building your first dApp. With Arbitrum, experience Web3 development the way it was meant to be: secure, fast, cheap, and friction-free. The Brave Wallet is your secure multi-chain on-ramp into Web3, and it's built directly into the Brave privacy browser. Gone are the days of managing multiple wallet extensions that put you at risk of phishing, spoofs, and tracking. With the Brave Wallet, you can securely manage your crypto assets across more than 100 different chains, including Ethereum, Layer 2s, Solana, and more, all without downloading risky extensions. The Brave Wallet is easy to set up and removes the headache of jumping between wallets and extensions. It's lightweight, but packed with great features, like built-in token swaps, buying and holding NFTs with a gallery view, and support for hardware wallets. But also much more than that, because Brave is shipping new features every single month, with a mission to make Web3 easier to navigate for its over 55 million users. Wallet extensions are a thing of the past, so get started with Brave's Web3-ready browser today and experience a decentralized web seamlessly without all the clutter. You can download the browser at brave.com/bankless and click the wallet icon to get started.
Here's a tweet that I saw this week, Ryan, which documents the penalties that Wells Fargo has accrued since 2012. In 2012, $5.3 billion paid for mortgage abuses. In 2013, $1.9 billion paid for banking violations. In 2018, $2 billion was paid for toxic securities abuses. In 2020, $3 billion was paid for fraud. And in 2022, just recently, $3.7 billion was paid for customer abuses. These are all collective penalties that Wells Fargo has paid. And I was doing a little bit of a deep dive just to fact check this. You know how many billions of dollars Wells Fargo has paid since 2000 in penalties, Ryan?
I bet we're in double digits here.
We are at $20 billion of penalties paid by Wells Fargo since 2020. And I just really want to drive two more points home on this.
Wait, since 2000?
Excuse me, since 2000. Since 2000, yes.
Since 2000, okay.
One, the $20 billion that they paid since 2000 is just a fraction of the money that they made because they keep on doing it. Yeah. So like they made more money these are all slaps on the wrist. So think about all of the shady ways that they made money and how much money you think that they made when they only paid $20 billion. So that's the first point I want to drive home. Second point is you don't get caught the first time you do something. And so, like, we actually don't know what these are just the things that we know about. These are the things that they've just been caught for. And so, like, they were fined $3.7 billion in 2022 for customer abuses. I'm going to go ahead and guess they've been abusing customers the whole time. I'm going to go ahead and guess that that's the goddamn business model of the goddamn company. And it's just happened to be that in 2022, the nation state said, hey, you're doing things a little bit shady. Pay us $3.7 billion to continue, and we'll just fine you a few more $1 billion in a few years.
We look good.
You're good. Yeah, you still get to farm yield farm your customers. Yeah, absolutely insane.
Do you know what's crazy about this too? As I look at this rap sheet, a 5.3 billion 2012, 1.9 billion 2013, 2 billion 2018. I mean, this is a repeat offender, David.
Yeah.
It's not like
it's just they just change what they are calling the offense.
Mortgage abuses, banking violations,
toxic security abuses, fraud, customer abuses. Those could all be the same thing.
How does this link to going bankless? All right. It's just like banks suck. We know from a UX perspective. They're also preying on their customers, it seems like, with kind of a rent-seeking, in many ways, toxic business model. Bankless has always been about using less banks over time. By the way, somebody over the weekend on Twitter tried to nail us and get us with a gotcha, which was basically like, David and Ryan, are you guys even bankless anyway, or do you secretly have bank accounts?
Do you think
We don't
my
secretly have
82-year-old
bank accounts.
landlord accepts Ethereum? No, it does not.
We don't secretly have bank accounts. We publicly have bank
Yes,
accounts.
we've talked about this forever.
Yes, we want to have less bank accounts over time. And every year, a benchmark for me, David, since I've been on this crypto journey, is more of my net worth outside of banks than inside of banks, number one. And am I using crypto money systems more than I'm using my Wells Fargo account? I literally have a Wells Fargo account that I'm stuck with because I have to pay bills in real life. All right. And every
Normie
single
bills.
year that those two metrics have gone up in that I have been more bankless this year than I was in the previous year. And that's what this journey is about. Because look, these predatory practices, this kind of landlord rent-seeking middleman type of behavior that most of the time goes unchecked. We can solve this at the protocol level. How?
Yeah.
Everybody owns their own money. We don't require the banks to give us permission to withdraw money from an account. We can have a smart contract wallet with a circle of social recovery, a small set of friends and family that I trust to help me recover my keys. I can use DeFi rather than use the traditional banking system. That's why we're on this journey. So Wells Fargo can't screw us any longer.
Nice rant. That's great.
That's
it's like
it.
it's really just a matter of just like my Wells Fargo account is like gathering dust. And you know how I know this is like I have to reset my password every time I log in because I always forget it.
Do you really?
I mean, then I got a password manager and now I don't have to do that anymore.
Have you actually gone in person to Wells Fargo this year? I remember we used to do that. Like
this year. No, not this year.
our banks.
Oh
for
no, I
Bankless
did
have-
because I needed to get quarters.
Remember, we used to do like bankless paychecks with like actual physical checks.
Right,
I think
yeah.
you had to like show up at Wells Fargo and like cash those checks with your bankless t-shirt.
Yeah, exactly. Yeah. Uh-huh.
Our previous bank, by the way, Bankless, the company, the entity, was previously banked with Bank of America, and they sent us a Dear John letter and kicked us out one day.
They made
we
us
have a
bankless,
nice little
yeah.
community credit union. So ironic that we actually were made bankless.
Yeah.
But anyway, that's Wells Fargo continuing to
Be great.
be great.
Be really good content for this podcast, that's for sure. So
Oh my.
here's the associated meme with this is like, so after Wells Fargo gets violated, pays violations, here's my favorite SpongeBob meme, which is the SpongeBob looking at that rock. And he goes like, oh, when we see me running, this is an esoteric SpongeBob meme. He's like basically the Flash, and he goes like, want to see me go and touch that rock? Want to see me do it again? if you didn't get the SpongeBob meme, then you didn't get it. I'm sorry, I butchered that, but whatever.
Bankless fans are going crazy right now.
Yeah.
They're wild with excitement. Just a reminder, this is from me. I actually received a Binance account deactivation notice
good
this
for you.
week from an old Binance account that I had that I no longer used. This is what it looked like. Account deactivation notice. Thank you for your support of Binance. This is to inform you that your account has been flagged by a third-party compliance tool, and we've taken a tough decision to terminate the service. You may withdraw your funds and ask that you do it before December 27th. So give me like 10 days or something. Afterward, your Binance account will be permanently deactivated. Look, this is just a PSA for us to remember that the crypto banks that we use, they can provide a fantastic service, are very important, great crypto platforms. They could still deactivate your account. What is the definition of a bank? Is you can deactivate your account.
Yeah.
And so this is why we are such advocates of decentralized financial systems like Ethereum. An ETH address can never be deactivated. I'm never going to get an email or a message like that saying you can no longer access your private keys on Ethereum, right? That just can't happen. Right. I have direct access to it and always will. And so that is, I think, a distinction that a lot of people learned in 2022. Just another reminder of it when I got this account notice from Binance.
And then there was you had a critique or Oriel Zengo who said, okay, but your Ethereum wallet can be stolen, phished, lost, tricked in malicious scams. Oh, and your reply is exactly what I was going to say. Yes, those are all things that you as an individual have control over. As somebody that has like juggled 50 wallets over the last like 5 years, never lost a single one, never gotten phished, never been tricked in a malicious scam, except for that one IOTA scam. And I haven't, even though, and I've never been stolen. So like, Yes, it can be those things, but that's because I'm in control. Like stolen fish, lost, tricked, and that could happen to your Wells Fargo probably. But that's their problem. Now it's your problem.
Funny? Do you know the only time I've actually like lost sums of money in crypto? It's actually been on crypto banks, CeFi lending platforms.
Really?
Yeah. Remember, like I've lost a little bit in Celsius, a little bit in BlockFi. Right. Those are the only times I've actually lost money.
So you can't lose your own money. You'll just trust somebody else to lose it for you. Great.
All right, man. It's been a year, hasn't it, David? It's been a fun year. Good in so many ways.
51 weekly roll-ups.
Yeah.
I'm going to do the 50-second. I'm going to do the 50-second next week, but you're going to be out.
Yeah. Oh, thank you. Thank you for doing that. But let's end with this then. What are you bullish on? And this could be this week. This could be going into 2023. Whatever you're bullish on right now.
Oh, I'm bullish on 2023, the whole entire year, and not just in crypto. Although, like I'll say it again, when prices are this low and when we're down this bad, like it's kind of like up only. Hopefully, like the upside is larger than the downside. That's for sure.
Yes.
But what I'm talking about in 2023 is a little bit just more like. 2022 was challenging for the crypto world, also for Bankless, and I know you know this. Like, team has grown bigly. We're doing some really ambitious things, and I'm at the point in my own personal life where like, I can't just like ape into 2023 without like a plan. And so like I've got my calendar up. I was like, in this month I'm doing this, and that month I'm doing that. Like I need to have this done by this month, and so like I'm just like leaning into the whole like structure thing. And I encourage other Bankless listeners to do something similar. Like if you, for example, were listening to the ETHGlobal hackathons and you want to go to some of those, get a calendar, put them on. Also put ETH Denver on there, put like ETHCC on there. Like set up a system of goals for 2023, because if you're going to win big in crypto, it's good. That's what it's going to take. So Ryan, I'm bullish on 2023 being like a planned, structured year for all of the crypto industry, for me personally, for Bankless, and hopefully we can all just like plan the end of the bull market rather than just wait for it to happen.
100%. I'm so bullish on having a plan going into 2023. Well, I'm a planner, so
yes,
I'm always bullish on that.
Planner,
but like that's how you. Too many people, I think, were just thrown by the seat of their pants and went wherever the wind carried them in 2021 and 2022. They didn't have a bedrock thesis for the space. They didn't have a plan for the space. They would FOMO into things, and during the FUD times, they would sell at the bottoms. Like that's a recipe for disaster. You just get thrown around and tossed by the wind, and you can never accomplish anything. So yeah, I'm absolutely bullish on having a plan too. You know what else I'm bullish on though, David?
Tell me.
I am bullish on 2023 being way smarter than 2022. 2022 was just dumb. Like it almost, and I don't want this to sound glib, but I think we have some separation on it where we could zoom out and distance ourselves from it. But 2022 really needed to happen.
Yeah.
It absolutely needed to happen. Yep. There's no way we could have a successful 2023 or 2024 without 2022 happening. Crypto is now way smarter. A lot of the tourists have left. A lot of the corrupt fraudsters are out too. The shaky companies have been completely wrecked. Much of this was justified. Some of it didn't. It wasn't, of course, but much of it was. And we're coming into 2023 way stronger, way smarter. Crypto didn't die once again. The builders are still building. And this is the underline. Ever since we started this Bankless podcast, we started this podcast because there's a recognition, I think, that you and I have that the world needs crypto more than ever. And going into 2023, it's the same thing. It's like the world needs crypto even more than when we started the podcast back in 2020, David.
Yeah, big time.
It's become more critical, more necessary. And we're smarter, we're better capitalized, we have more builders in the space, we have a clear roadmap and direction for where we're going. So that's what I'm excited about, is we just got a lot smarter. 2023 is going to be a fantastic year. I think it could be one of the best years for being in crypto. I don't have the hopelessness that I had in 2018, right? I'm like, oh, we'll get through this. Not a big deal. And yeah, I'm excited about it.
There was like a vibe in about like 2019, I think, where it was the golden age of building in Ethereum. It's really the golden age that like so many of us during the peak of the bull market were like, man, I really want some of those quiet times to come back. Those good days. That 2019 feels like 2023. It's like, okay, the pain's behind us. There's just building left and just signal and progress. That kind of feels like the right timing.
Is this, David, too stupid to map it? Is like 2019 is like 2023, right? 2020 is going to be 2024 analogous. And then we're going to get another 2021. That's going to be 2025. Do you think it will like just play out pretty much exactly like that or close to that? It's just another fractal pattern.
You asked if it's too stupid to do that. I think yes. And it's still going to be right.
I think so too. Like that, if you were to ask my just, gun to my head prediction on how this is played, that's exactly what I would say. I would say we'll have next year where we're building, it's gonna be like 2019 or just, and it'll be 2023 will be just builders, there'll be some chop. It'll be boring. It'll be all sideways action. We won't even get any big run-ups. And then 2022 will hit and we'll have a glimmer and it'll be something like
2024.
Identity.
2024.
Oh, 2024.
2024 will be the bull market, but only in hindsight. You won't know it in the moment.
And a small segment of people, only the people who have stayed around will actually see the glimmers. We won't get mainstream in 2024. It'll be like 2022. And then we'll have breakout in 2025. And we'll get back to kind of mania, craziness. 2021, we'll have to tell everyone to calm down.
We'll all forget to sell. It'll be great.
That's what I would predict. Meme of the week. What are we looking at, David?
How it started, Sam Bankman-Fried playing with some magic cards, sitting in front of 6 monitors in his gaming chair, looking like a trader god, is how it started. And now it's how it's going, which is being escorted with unshaved, unkempt, sweaty shirt into a jail.
Wow,
how it's going.
These two pictures sum up the beginning of this year and the end of this year.
That's exactly right. The top of 2022 and the bottom of 2022.
Well, guys, Bankless listeners, on behalf of us to you, I hope you enjoy some time with your family. Happy holidays. David's going to be with you next week, next Friday for the roll-up.
I got to reach out to Anthony.
Never misses a roll-up, all right?
That's true.
I'm going to be gone, but he's going to give you a final send-off before the new year. And we hope you enjoyed this year with Bankless. We've certainly enjoyed bringing this to you, even though it's been such a crazy year. It's been a lot of fun as well. So risks and disclaimers got to end like this. None of this has been financial advice. Crypto is risky. 2022 taught us that. You could definitely lose what you put in. Some of you did, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.